Hi, I'm Lori Lackey with Valley Funding and Investment. A word that you hear a lot when you're either looking to purchase a home or even refinance is closing costs. And it can seem like a bad word because it seems like this amount of costs that you're going to have to pay above and beyond the down payment or the amount to pay off your current mortgage. And actually, the closing costs are what it takes to be able to close your transaction. So there's lender's fees, which covers the cost of the mortgage company, the cost of covering the underwriting and the doc drawing and those type of processes that have to be covered. The other portion of closing costs are title and escrow fees. Those are paid directly to the title and escrow company to cover their expenses of issuing title policy, doing the escrow, handling the escrow services. The other portion would be appraisal and credit, which are pretty self-explanatory. The appraisal pays for the appraiser and the credit pays for the credit report that's actually pulled on you. The next portion of closing costs, which are actually called prepaid items, would be items that do have to be paid, but they're not paid to a company. They're actually paid or held on your behalf to cover expenses that are going to be recurring again and again. So interest, real estate taxes, and insurance. Those are considered prepaids or recurring closing costs because even if we take those items at the time of closing, next year you're going to have to pay insurance again. The taxes are going to come due again. And the interest is paid obviously constantly. So those are items that are going to continue. So they're not considered a closing cost like a fee that goes to a third-party company such as a lender, an appraiser, an escrow company, for example. Now there's many ways these can be paid for. If you're refinancing and you're paying off your current mortgage, you can include that in the loan amount. So if you're paying off $100,000 and you have a couple $1,000s in closing costs, you can increase the loan amount, for example, to cover those extra costs. On the other hand, if you're purchasing, there's a few different ways, there's a few different options. So you can bring in the money along with your down payment to cover the closing costs. Another option is in the contract to ask the seller to pay those closing costs. It's getting harder and harder in a super competitive market to have sellers agree to that, but we do still see that the sellers are willing to pay some on some transactions. The third option is, so we have you pay it, seller pays it. Third option, which also could be available on a refinance, is a lender credit. So by increasing your interest rate option, you receive a larger credit from the lender to cover your closing costs. There's a lot of details on that option and how I can explain it and show you the numbers and make it make sense for you. So if you're looking to purchase a home or refinance, I'd love to go over your particular situation and the details and show you how we can cover the closing costs in these different options. Please give me a call. I look forward to speaking with you.